This is Satya Pradhuman of Cirrus Research. I want to call your attention to the latest issue of the Risk Metrics. The title, Risk Aversion Climbs at Rate Risk Threatens Global Growth. The first curve relates the dollar strength or most key markets, their currency weakness. A lot of this ties back to the Fed continuing to tighten and also hinting that they will continue at a pretty rapid rate. As a result, most markets continue to struggle with a strong dollar, especially those that are dollar pegged. And so this curve relates the various currencies and their weaknesses against the US dollar. Bottom line, though, is that if we continue to stress this quality bias because the profit cycle is peaking, a Fed that's continuing to tighten can only exacerbate this view. So this idea of higher quality stocks outperforming, it's already underway. We think this strengthens. The second point has to do with risk aversion. What you're looking at here is a risk reward chart. On the x-axis scale is degrees of risk aversion. To your left-hand side, fairly risk-averse world. To the right-hand side, euphoric. And then the y-axis relates to the degree of crowding. And what you'll notice is that critical markets are below the main range. This is telling us that you've now got yourself a market that's really taken out any sort of crowding. India may represent a hint of crowding that remains, but if you go back a year or 2 years ago, the sort of pandemic trade, most of these flags were centered at the upper end where markets were chasing largest leadership stocks. That's reversed sharply in the last 12, 18 months. Importantly, though, as we continue to see a noisy environment, as rate risk remains, and as the earnings season comes in a more choppier fashion, we think that the risk aversion move that we've witnessed in the last year and a half, where risk appetite has really come in, we think this is net a constructive reading. In other words, you do not have investors that are about to be surprised by softer earnings. And so we think the fact that most of these key markets are in this lower half, maybe left quadrant, that's a good thing in terms of tempering the sort of realities of the earnings seasons to come. With any questions, feel free to reach out to us. Thank you.